This is our consumer forum, and I'm the chair, Faith Reynolds. I'm the independent consumer representative at the Open Banking Implementation Entity, and so I do have a role of representing consumer interests. I involve lots of consumer stakeholders in that in that process, and every so often we have an event like this where we can draw a larger group of people together to talk about some of the issues around consumers. So I'm very pleased to welcome everybody today. The FCA suggests that just under half of UK adults are potentially financially vulnerable, so 24.1 million at any one time. And we know that COVID has exaggerated that. Some people may be experiencing vulnerability for the first time, while others may be suffering further as a result of the pandemic. So in its latest guidance, the FCA said it expects firms to ensure that outcomes for vulnerable consumers are as good as those of other consumers. And key challenges that firms are facing include how firms might use data to identify vulnerable consumers, and indeed how comfortable consumers might feel about their data being used in that way. And of course, there's other questions about what kinds of products or services might help people in vulnerable circumstances. So the question today is, how can we build a thriving open banking enabled market that actually delivers financially inclusive products and services for everyone, and no matter what life throws us? So first, we've got a great panel of speakers lined up, and I'm going to kick off. Just going to introduce Chris first. Maybe you can give us a wave, Chris. Chris Fitch is a research fellow at the University of Bristol and vulnerability lead at the Money Advice Trust. He leads a programme of award-winning research and intervention work on consumer vulnerability. And he's also the host of the podcast series Vulnerability Matters, which is available on all the important platforms and is well worth a listen. And just, to make things interesting, because I know some of these speakers are quite well known, the fun fact about Chris is in 1996 he was the London Playwright of the Year. So very talented man, Chris. Lots of different things up his sleeve. Professor Joe Gladstone, I don't know, Joe, if you want to give us a wave, is an academic researcher. He's one of the world's leading experts in analysing transaction data to understand human behaviour, and recently authored the FCA's occasional paper on understanding consumer financial wellbeing through banking data. And I'm very pleased to have Joe, because we have talked about the report in other sessions that we've held recently. So Joe is based at the Centre for Consumer Financial Decision Making at the University of Colorado in Boulder, and he's also a cycle enthusiast, made all the more enthusiastic by COVID and lockdown. So Dr. Leda Glyptis is a recovering banker, lapsed academic, team builder, venture builder, tech geek, speaker advisor, and all-weather optimist. And I just wondered whether that means you were very excited about all-weather clothing, or whether that was like all-weather. Anyway, Leda is the Chief Client Officer of 10 Times Future Technologies, a challenger core banking provider, and she's worked for several global financial institutions, as well as a consultant for banks and financial institutions for all sizes across several markets. She is a regular speaker on tech delivery, and I'm super pleased that she's been able to join us today. And she writes for FinTech Futures every Thursday. And you can find her at Leda Writes, and I just encourage you to read that, because it's always full of really cool stuff, as well as really insightful information about the sector. And one of the things that I was kind of interested to learn about Leda is that if you have bad news to deliver to her, then you have to deliver it with a fun fact. And one fun fact that I've learned from Leda is that tears need gravity. Interesting. So, Diane, do you want to give us a wave, Diane? Diane Burridge is from Moneyline, a leading not-for-profit social business on a mission to transform the way low-income households access fair and affordable financial products. So Moneyline aims to reduce anxiety and create dignity and trust in the financial lives of the community that it serves. And Diane is a WISE 100, so one of the top 100 women in social enterprise. And in 2019, she became a senior fellow of the Finance Innovation Lab, which was recognising a significant contribution that Diane has made towards sustainable finance. I just want to encourage you, if you are if you're online, if you want to add your questions to the chat as we go, that would be great. We'll try and pick up as many of those as we can, and my colleague Daniel is going to try and will help me do that. We'll try and keep to some of the themes as we go through. So, Chris, I'm going to start with you. I've listened to a few of your podcasts, and I really appreciate the way you kind of start off, and quite often, I think, if I've got it right, you ask people what what vulnerability means to them. So I wondered if I might ask you, what does vulnerability mean to you, and why is it relevant to open banking? Why are we having this session today?
What is vulnerability, and why is it relevant to open banking? Firstly, I'm shocked you've only listened to a few of the podcasts, Faith. There are quite a number out there. So I think that the most important thing is there's hours plowed into answering the question, what is vulnerability? But I think it's the wrong question. It's the wrong place to perhaps start with for open banking. Rather than get lost in regulatory definitions, I think the question, what is the customer actually vulnerable to, is a lot more helpful. And there's three very brief reasons for that. Firstly, the regulator, the FCA, talks a lot about the drivers of vulnerability: life events, health conditions, financial resilience, financial capability. However, these are the causes of vulnerability. They're not what actually customers are vulnerable to. They don't tell us about harm. They don't tell us about detriment or pain that customers may face. And when I talk about detriment, I'm talking about things like financial difficulty, maybe can't use a product or service, maybe poor decision making, unable to protect your interests, maybe even isolation or hunger, if you want to take it, or addiction, you want to take it to that kind of that point. Now, causes alone don't tell us about the negative outcomes a customer might face or what action we might need to take to overcome them. So in other words, what makes someone vulnerable is not always the same as what they're vulnerable to. And we always have to bear that in mind, because if we can identify and understand what harm, detriment, or disadvantage a customer is exposed to, then helping them is going to be a lot easier. And designing products and processes is also going to be a lot easier. So that's my first point. The second one is that the best people to tell open banking what consumers are vulnerable to are the consumers themselves. Inference is one thing, and we'll come to that a bit later on. But they'll tell you if they don't trust your product. They'll tell you why they might not use it how you expected them to. And they certainly will tell you how it doesn't fit into the way in which they live or how they see the world working. And we launched 2 guides on inclusive design this morning at Money Vice Trust and Fair by Design. And I'd encourage colleagues in open banking to take a look at them. So ask yourself, is my open banking product or proposition involving customers in its development? Because if you don't involve them, you're making assumptions about them. They can be evidence-based, some of those assumptions, but it doesn't beat involving consumers. And then thirdly, is the last point to make, is we have to ask ourselves honestly, is the open banking product or platform we're developing or offering really the right tool to help this customer group we've got in mind become less vulnerable to financial or non-financial vulnerability? Harm. So if our product is really focused on vulnerability to financial harm, then that's fine. But don't pitch a financial management tool as helping to address other forms of vulnerability, non-financial, if it doesn't do that. And I have to say, I'm open to be convinced, but I'm yet to be convinced, maybe this is the moment, that open banking developers and products are ready to be aiming to identify or infer non-financial vulnerability. Should we be using financial data to infer whether someone's got a gambling addiction, whether someone might go on, maybe their data contains cues or clues that they might go on to develop dementia. John Hopkins have published a paper about this recently, or to draw some just conclusions about who we are as people. Should we do this? So ask yourself, as open banking, just because we can do it, should we do it? And if we should do it, are we ready?
Cool, that's a great opener, Chris. Thanks very much for that. And I guess to go straight to Joe, I mean, you're the man to answer this. So you've done a recent report with the FCA looking at transaction data to look at drivers of financial well-being, and so I wondered if you could tell us a bit about the report, some of the metrics that you used for vulnerability, and perhaps respond a little to Chris's question. Are we ready to? Should we be using transaction data in this way to identify vulnerability? And what are your thoughts on that?
Thanks, Faith. Yeah, I think that we need to recognize, first of all, that open banking has given us a gift, which is now amazing how much data we have to understand consumers that we never had before. Most people have multiple bank accounts, so most organizations are only going to get a slice of someone's financial life. But the idea now that you could have someone's data from across all their financial products and actually understand their full financial life is a true kind of magic gift that we've got to understand consumer vulnerability like never before. So the work I did with the FCA kind of went a step beyond that, beyond just looking at these objective metrics. So traditionally, regulators, policymakers, when they talk about vulnerability, they might mean things like you've missed 3 payments, or you've not got enough liquidity to deal with a life shock, whatever it is. And that's fine. And that's like a nice, useful metric to have. But that's not really what we mean when we talk about vulnerability, at least what I mean. I tend to mean something like, do you lose sleep at night worrying about your finances? Does it take up your mental capacity to make other decisions because you're making these constant trade-offs? So I think that we need to also take into account subjective measures of financial vulnerability. And that's what we did in this project, where for thousands of people, we measured their subjective perceptions of their finances using surveys and matched that with their transaction data with large retail banks. And from this data set, you can see how these things are related. How are people's objective metrics from their financial accounts related to their subjective perceptions? And ding, 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 major insight 1 is that actually they're not that related. Like the correlation is quite low, a correlation about 0.2, not amazing. And so that would really suggest that when we're using these objective metrics, we're missing out a lot of this interesting variance. If we're just going to treat people as you've missed some payments, you're vulnerable, we're missing out on a lot of this detail and a lot of this interesting stuff. So from the project, we can see which of these objective metrics is most related to people's subjective financial well-being. So how many days people spend in their overdraft, how volatile is their account balance, these kind of things seem to matter a lot for people's financial well-being. But I just really want to emphasize that just looking at one slice is not enough. Just looking at objective metrics isn't enough. We need these subjective perceptions to really understand consumer financial well-being.
That's really helpful and really interesting to understand how actually some of the markers that we think might mean that people are struggling actually are less, may not necessarily mean that. The objective markers, it's actually getting to know consumers. You have to actually get under the skin of consumers, actually know people. And I think that's a really interesting thing about, not inferring the wrong thing from data. So very, really helpful. Obviously, there's been lots of discussion about, how can firms deliver more financially inclusive services? How can they be using tech and data to help people in vulnerable circumstances? And Leda, I just wonder, what do you think is holding back banks and other firms from using all the data and tools that Joe's beginning to mention, that was started mentioning there? What are your thoughts on what's holding firms back from making the most of open banking?
As I'm hearing people talk, I'm nodding and thinking, yes, that's absolutely the right question. So if I go back to what Chris said, are we ready for this? And if we are ready to use this data, should we? And then weaving in what Joe just said about the art of the possible, beginning to dawn on big organizations, what could be done. The 3 questions need to be answered at the same time, right? And what we have is big organizations that currently don't know if they should. They're most definitely not ready. And by not ready, I mean they both don't know how and with what. So as the big questions of who guards the guardians and who is the right decision maker to be asking these questions and passing and storing that data, we have big organizations that are trying to wrap their head around the art of the possible and the nuance that Joe just described, facing into technology infrastructure that is very often older than me, which is not great when it comes to systems, right? And those systems are great for what they were meant to do when the journey of those banks started, challenged immensely by the technical requirements of open banking and PSD2 and increasing regulation that is asking for a different kind of standard and a different kind of openness. But because banks haven't quite wrapped their head around what is possible from a business perspective, what can I do with all this to actually drive my own purpose forward, what the boundaries are of new ethics and new requirements, and also what is where that meets the sort of technical requirements that you need to be put in place. What we're looking at is a lot of these revolutionary moments being treated as regulatory projects. So the short answer to your question is that banks have technology that is not fit for a real-time world. The exercise of updating and upgrading it is very much underway, but is driven by a whole host of conversations that are regulatory and competitive, and the moral overlay of, wait, if we can tell who's vulnerable and possibly intervene to assist, what does that look like, and what does the technology to support it need to look like? And that conversation isn't taking place.
Well, I suppose today is a good opportunity to start asking those questions, isn't it? So what does the technology need to look like? And I guess can you sort of maybe give us a clue a bit later in terms of how do you think open banking is helping? Is helping that move towards being able to have some of those conversations?
I do. It's by hook or by crook, right? For those of us who are part of big banks, either working for them or working with them, when a lot of this regulatory thinking came down the pipe, we saw banks go, okay, the world is changing, right? There is absolutely no illusion that this is just another piece of business as usual regulation. The direction of travel is very much set and is transformative. And I worked with a bunch of banks over the years that went, there is creativity that will come on top of this. We get it, we see it, in principle, we welcome it. There should be a way we should make money, right? And there were some very lucrative consulting projects coming up with ideas of what you could do on top of open banking. But the reality is that to a very large extent, it was a regulatory project. And therefore, it became an exercise of what is expected of us? What do we absolutely need to do? Does it dovetail with any other pieces of work we have in flight around omnichannel or our sort of consumer channels, which kind of limited the potential impact? And then it lived under that sort of regulatory banner plus. We saw some interesting partnerships, but we didn't necessarily see it transforming the thinking inside banks, and nor did we expect it to. It will take us to a brand new place, but right now we're seeing that first wave of work that treated it as a very sizable regulatory project coming to an end, and organizations now having, to your point, the tools, or at least the beginning of the tools they need to answer the questions, but not necessarily the mindset yet.
So we're getting there slowly, but a bit more by hook or by crook. So Diane, it would be great to hear from you. You've spent a number of years in the community finance sector, most recently as CEO at Moneyline. And I wondered if you could maybe tell us about some of the benefits of open banking and how it's helping you to identify people who might be vulnerable. And I just wondered also if you've got the stats to hand that you wanted to share just around, we've got a question here around statistics on proportions of vulnerable adults who are not banked or who are not using digital banking. In my head, 11 million springs to mind, but I haven't got the the place to go for it, Philip. Is the consumer digital, the Lloyd's Consumer Digital Index. That gives you a lot of information, so that'll give you the stats. But if you had anything to say just about levels or stats as well, that would be great, Diane. Otherwise, we'll come back to that. And thanks, people. I'm suddenly seeing lots of questions coming through. Great.
Thanks, Faith. I come from almost 20 years where a service started with a pen and paper and a sit-down conversation. So, and that core of the conversation actually remains in what we provide today. But we've been using open banking data as a use case in our credit underwriting process for almost about 2 years now. And it's created that opportunity to help us better understand and to begin to design our customers' journeys around the peaks and troughs and stress points of trying to manage your finances on a low income, which is a level of financial vulnerability. Analysis of cohorts of open banking data has brought to life that the state that individuals find themselves in the point in time, because of perhaps a certain set of circumstances, does not necessarily determine what the traits are going to be or how they might conduct their financial lives when they're not in those circumstances. And those might be financial complexities, social complexities, some of the things that we've talked about so far. So it can be a wide spectrum that isn't just financial, and some can be more permanent and some can be more transient in nature. So we've been working on how we can evidence that our approach to the design and structure of products, and we do talk to customers, and I agree with Chris, customers are not frightened to tell you when services don't work, but how the structure of the products can be an effective bridge from a current state that you might be in back to a more stable trait of circumstances and financial behaviour, and show good outcomes for customers. Never been more relevant than in the last 12 months with the COVID pandemic, where people are maybe moving in and out of layers of different issues that they're experiencing at any time, that then kind of translates into different needs at different times. So when we were underwriting, we kind of think about and look at three different things, and we use this with other information and that core of that conversation that still remains. So one, have you had a blip where you thought you could manage an unexpected bill, but this then created a knock-on effect of not paying other bills? Two, are you in distress where your income just doesn't cover your costs at any time and the affordability is not there? And then three, are you in distress because you struggle to fit with a system of payments, but the affordability is there? So you're missing payments because the system doesn't work with how you live your life and how you structure your income. 2 and 3 are both indicators of financial distress, but for very different reasons. 3 is about the system not working for a different need. So where we can't help responsibly with a credit product, another way that we're using data is maybe because of affordability, over indebtedness, financial problems, with unmanageable levels of gambling, or it's been a yes to credit. But we can also see ways for people to maximize their income and improve their financial resilience. This kind of rounded picture of circumstances acts as like a triage, so it can signpost to other forms of help in a more informed way. We're also working on designing ways that we can offer help not all at once, because sometimes it needs to be phased in a way that fits for how someone wants or can receive the various kind of elements that you can help with bridging those circumstances. So benefit of open banking data and the way we organise it, it's created greater consistency, actually, in the way that we can interpret the information, how advisors can tailor the delivery of our products and services. It's not easy. It's always work in progress for us, but you know, we're determined that we're not going to take the one size fits all approach.
I think that's really helpful, isn't it? That you're able to get that rounded picture that open banking is helping to create that rounded picture. But it's, you know, you don't use open banking data on its own. That's not the be all and end all. It's a supporting part of the activity. I just got a couple of questions in the chat. So there was one which is, how active are traditional credit bureau in partnering with alternative data providers? I don't know if you had a comment on that. So perhaps you could explain how you access open banking data, for instance.
So we partner with an organisation that is principally a credit reference bureau, but also has a subsidiary of what they do in terms of being a provider for the open banking data and using that in underwriting. What we don't do is take their kind of off the shelf offer. We take the almost the data, and then we overlay how we want to use that data rather than the standard dashboard format. So that's how we use it.
Chris, I just wanted to come back to you. There's another question in the chat, and I thought it might be useful for you to respond to that, which is, how can I use open banking to spot vulnerable customers today? Is there any sufficiently convincing evidence that there are any vulnerability flags in the data?
I think it goes back to the point of vulnerable to what? And I would have thought that identifying vulnerability to financial harm, either in the short term or the long term, is something that you might be able to establish by looking at patterns of transactions over time and combining the multiple data sources. And I think that's absolutely fine. I think where I'd be really worried about open banking identifying things today would be for non-financial vulnerability. Sure, design the platforms. Sure, design the products so they're accessible and usable the people who are vulnerable to things which are non-financial. Yeah, the product should work for everybody, inclusive design. But I really worry, and I've heard a couple of presentations where people have said, oh, we're able as a platform provider for open banking to pick up on addictions, gambling addiction through spend. However, they're not able to give the support that Diane's agency is able to give to then move from identification to conversation, from conversation to understanding and support. So yes.
So it sounds like there are vulnerability flags. You can find them in the data, but it's not enough simply to identify vulnerability. You actually have to be able to intervene and do something, which is what Diane has sort of been talking about. Just coming out to you, Joe, did you have any just really practical examples of sort of flags that you might have seen in the data? So, you know, if gambling sort of routinely coming up, does that show that somebody's got a gambling problem? If somebody's in receipt of welfare benefits, might that mean that their income is more stable from a point of view, or could it be less stable? What kinds of things do you actually see? I know there's a real kind of practical ask for, just tell me, what are the flags? What's the data I should be looking for?
I mean, to be honest, you know, when you start looking at tens of millions of transactions at a time, it's the stereotypes that come out to you, you know, like, so this is not complicated stuff. You just choose any outcome you're interested in. So that could be like my work, we use subjective measures of financial well-being, or you could choose that kind of 3 missed payments or whatever as a binary outcome. You feed in all your open banking data, all the transactions. You choose how you select those features. So you might also think that someone spending money on a takeaway on a Friday might be someone different than someone who's spending money on a takeaway on a Tuesday. And then you would feed all that in and just take off the shelf machine learning algorithms, random forest model, XGBoost or whatever, and you just train a model to predict those outcomes. You know, we're teaching this to first year undergrad computer scientists. You know, like anyone can do this. And then, you know, what comes out from a feature importance list, as in like, what are the most important features? Some of it most of it is just obvious, you know, like, so yes, you know, if they have like very volatile account balances, if they're spending a lot of money on gambling shops, on rent to own stores. But kind of interestingly, actually, a lot of it, there's quite a strong correlation between like the platform services. And I think that's mostly because that's picking up age differences, that younger people tend to be more vulnerable, and that they're the ones who are using the Deliveroos and the platform services. So you definitely see that. I mean, it's very interesting when you start feeding in all the brands into it. I haven't published my research looking at, you know, this stuff because it seems kind of controversial to, you know, say what brands are most associated with all this vulnerability. But the reason I haven't done is because anyone with this data can do that. Like there's nothing particularly complicated about it. And if I was to tell you what flags to add into your data, that's not really going to do you any good. Like in some ways, the really exciting bits are the bits that we can't explain through a Zoom chat. It's the interaction of the fact that someone who not only uses that, you know, gambling shop, but also spends money in impulsive ways and also buys these things on a Monday rather than a Friday. It's the combination of all these things that will make your predictive model very accurate, but might be a black box that you can't explain.
So just to follow up on that, and if you could be quite brief, Joe, but just how legal is profiling without a consumer's explicit consent to use their data? And what happens if someone is profiled as not vulnerable or vulnerable without their consent, and then they don't get the product or support that causes them harm as a result?
I'm not a lawyer, so this isn't my area of expertise. I mean, I would say that at least from what I understand, like, you know, my research is legal in the sense that I'm just trying to understand vulnerable consumers. And so I can use this data as a, you know, in the way that I've described. I think that it is still a gray area about using data for purposes that people haven't agreed to. But the fact is that when you sign up to a bank or a service, if you were to actually look through the T&Cs, you'll see that actually you've provided explicit consent for them to use the data in all kinds of different ways that you might not be aware of. And those different ways include sharing it with third parties, includes kind of fundamental research and things like that. So I think the reality is that people have already consented. They just might not have made particularly informed consent.
Chris, if you give us a quick response, and then
just,
I'll come...
just very quickly,
yeah.
the 3 things that you might look at or read. One is Data Protecting by Money and Mental Health Policy Institute, which is about using account transaction data to look for financial and non-financial harm. The second is our own work at the Money Advice Trust on GDPR and vulnerability. You can get that on the Money Advice Trust website, moneyadvicetrust.org. And then a really good paper, and I hope we can get back to this, Dan Holloway suggested this to me, is by Sandra Wachter and Brent Middlestat from University of Oxford, which is all about inference and data privacy, and taps very much into kind of what Joe was starting to talk about there.
Thank you. And we'll try and get these resources into the chat. So if you get a chance, Chris or Daniel, if you can stick those into the chat as we go, because I think there are actually some amazing resources. And the Money Advice Trust website and the Vulnerability podcast, and also the work that Chris does with UK Finance, creating a Vulnerability Academy, means that you can access information and have some of these discussions in a very practical way, and you might get some answers to your questions about what those flags are too. So I just noticed there is a query in the chat. So I just wanted to come back to Diane. Diane, we talked about some of the benefits that open banking can bring, and you know, we've heard a little bit, you know, that there might be some vulnerabilities created as well if you just rely solely on that data. But can we kind of look a bit more closely at open banking data itself? We hear a lot about a poverty premium. So this is where people who are on lower unstable incomes or don't use traditional kind of payment methods perhaps end up paying more for services than we do. So the people who have least end up paying more for essential services. And I'm thinking that open banking should be able to help in those settings, because actually it should be able to help people, for instance, access credit when they perhaps couldn't before. And I know that that's one of the benefits of open banking, but are there any sort of challenges that you're finding in the data? Is there an open banking poverty premium we should be aware of?
Yeah, I think there is. Just thinking about the statistics we talked about earlier, there's currently about 1.3 million people in the UK who are unbanked. But I'd say it's probably triple that what I would call underbanked, in meaning they don't use a bank account transactionally. And we still see a significant cohort of people that we see that operate in that way. They use it to receive their income, and then they pay many of their bills and expenses still in the cash economy to an extent. The physicality of cash gives them a level of control on that day-to-day basis, and making a little bit of money go a long way. Mostly the direct debit system doesn't work for them because the flexibility needed around payment patterns. But there could be opportunities with some of the new payment options that are coming around, request to pay, that overlays communications and could potentially give people more control. But categorization, you know, there's still some payment of household bills, like prepayment for the supply of utilities, using PayPoint cards at the local grocery shop, where the bundling and the categorization of these types of transactions within open banking has some real inconsistencies. So then you've got to start trying to make reasonable assumptions about expenses, and then they're introduced into the process. And that's not just for credit. That could be if you're trying to offer somebody a better deal in terms of maximizing the income or the service that they're getting. So categorization of income as well, not just expenses, that can be inconsistent. For someone, for instance, who is working multiple part-time jobs with much smaller amounts that are coming into their account at different times, and they're fairly irregularly, so that might fall below the income categorization thresholds that are set. Almost it's too small to care about, but we would want to categorize it as income because it's that whole picture. So if the reluctance, I would say, for some individuals to engage with using a bank account more conventionally is trust and control, and then the systems of payment are designed outside of the banking system, and then on top of that, the systems of categorization of transactions is designed for the average reasonable customer, not the complex person who has variable needs. You can't really blame somebody for not engaging or being set up to fail. So surely this is where system design approach must be a route to far greater inclusion, and not falling, there being a hazard around the poverty premium. It's about that value proposition, and to encourage greater adoption for customers, not just people who are easy to sell products to. So trust becomes a real massive issue here, and I think one thing to think about in terms of trust is how can somebody be confident that firms, we've got all this data, that they're going to use it to create value, not just to minimize risk or exclude less profitable customers or protect themselves, which then perpetuates almost certainly in the current economic outlook as well, increasing levels of exclusion. And that's what I'm really concerned about for consumers and citizens of products in this system.
That's really interesting. I think it goes to that point of trust and how we can kind of build trust into the new into this new world, really. And Joe, I mean, you've talked a bit about your work and the pioneering work you're using around transaction data, and you have investigated all sorts of interesting things about people. You know, can you predict somebody's personality from what they buy? Looking at the secret spending patterns of people in romantic relationships, whether actually being nicer makes you more likely to suffer economic hardship. So, to what extent do you think the kind of Big Brother effect might drive away people in vulnerable circumstances from open banking, and what do you think is really needed to build trust in this new ecosystem that we're building?
This is a really interesting question. I don't think that I've got, the answers to these big picture questions. I mean, it comes down to privacy, right? And I just think that we've got just a completely wrong-footed approach to thinking about the question of open banking and open data in general and privacy. We've got this kind of 1950s privacy hat on, where we seem to think like, okay, what does privacy mean? Privacy means the ability to decide if I reveal something about myself to others, whether that's an organization, friends, or whoever else. So privacy means my ability to not allow others to know that I am what my political views are, what my sexuality is, or what my financial vulnerability might be. But just the reality is that that's gone. So that kind of privacy is dead now. It's over. Because the reality is that we can predict pretty much anything about someone if we have enough data about them. Okay, and you'd be kind of amazed by how little you need to make these kind of predictions. If I was to choose, say, like 30 random Facebook likes of things that you've liked online, I can predict incredibly intimate things about someone with high probability, like their race and obviously their gender and their age, but also more intimate things than that. And so I just think that we need to, rather than harking back to this old kind of privacy and thinking, how can we constrain and reduce technology to try and fit with this old vision of privacy, we need to be a bit more creative and think, okay, if we live in a world where we can't forget these new techniques, we can't put it back in a box, we can't unlearn that we can just do a simple algorithm and 2 minutes later we have all these amazing predictions. So because of that, we need to design a new world that accepts that we're no longer able to choose what we reveal about ourselves to others. And that's the exciting bit. It's exciting to try and, think about what a world like that looks like. Now, obviously, that spiel doesn't really deal with the fact that there are going to be some people who are going to hate that idea and therefore want to reduce their ability of their data to be used by others. But I think a lot of this is cheap talk. People say they care about privacy, but their actions reveal that they don't. So it's easy to say in a survey or an interview or right now on this Zoom call, yes, I really care about privacy. I don't want anyone to use my data. But the reality is that we all just used, Google Maps yesterday, and it tracked, wherever we were, even though the fact that we were just sat in our living rooms, not going anywhere. But, George Lowenstein at Carnegie Mellon has some really interesting research trying to get people to put a price on privacy. And I can't remember the exact figures, but basically people are willing to pay cents, like 30 cents in order to have privacy over their data. So I think it's fine to say, I care about privacy. I don't want anyone using my data for these things, but then show me that people really care through their behavior. And I haven't really seen that yet.
nice controversial views for a number of us, I think, I'm sure. So, and I think it's a very kind of interesting debate. And I think for me, there's something of a reality check for us, actually, is that Joe is in academia. He's working with young people who are being taught to use this data. There are no constraints around the way financial services firms use data. And Bailey, I wanted to pick up a couple of your points that you put in the chat. Bailey is a real expert in vulnerability. She's also a tech expert in her own right too. So I just want to make sure that we acknowledge Bailey's comments. And one of the comments that she's making is that there is a difference between an essential service. So should I be able to choose how my data is being used in a service such as banking, where it's an essential service that I need to function, versus if my data is on Facebook, is there something about the different level of control that I have over that data versus my banking data? And then just also, because I think this talks a little bit to the points that you're making, actually, which is, so Bailey also says, can I suggest reframing? So not using data to split out on vulnerable consumers versus non-vulnerable consumers, but to find the relevant triggers that indicate heightened vulnerability and an opportunity to intervene. So actually, this sort of world that we're in is that actually we're all vulnerable consumers. I think we kind of say that, there's sort of that, some people are not vulnerable, but actually a number of us are vulnerable to the complexity of financial services, and being able to have this new world where there's actually lots and lots of data flowing around, would that help normalize the fact that many of us struggle with issues in life and that most of us are vulnerable at some point, and actually bring that to the fore a little bit more than perhaps we're seeing in the way that we think about vulnerability when we're all tucked up at home in our warm, cozy homes with a stable income and no health problems. So I think there's just something about, does exposing more data actually expose the reality of all of our lives a little bit more? Anyway,
we are assuming a degree of sophistication that doesn't exist in the majority of high street banking. The fact that it is possible doesn't mean that it is available. And I think we need to take that into account, because the reality of what can be offered to a mass population in terms of size is driven by what is feasible in terms of systems and policies now. So what Joe describes, absolutely possible, but the reality of most banks is that they keep the data that they do have in data lakes that are static and cannot be queried in an active way unless it's a very active side project of people manually putting up infrastructures. And the reality is, unless there's a Joe in your life to help you ask some clever questions, you spend quite a lot of money and end up finding out that after people are widowed, their spending changes. And what do you do with that information? So the reality is that my current bank offers me a mortgage every other month, even though I have one with them. And I'm sure that you all have experiences like that from your high street bank. And going back to talking about the technology is important, because what we've heard is super valuable in terms of Joe laying out what is possible. And what he says is absolutely right. Some of those extremely helpful insights are not even that hard anymore. This is something we can teach and access very easily. It is possible, it is there, but it is not necessarily available to most banks in terms of both the talent and the systems they have in their organization. So as they're looking at building up that technology, there's a very important question from Chris and a very important one from Diane that complicates matters. From Chris, the should we? And if so, who is this we? And who gets to make the moral judgments about who gets to intervene and how? Who gets to label vulnerable behavior for how long? And to what degree do we intervene to protect people from themselves, their choices, their circumstances? And to put Diane's point into the mix, how do we step in a way that is actively meaningful for people whose behavior might not give us the data sets we want? We are all multi-banked. Most people, the average in the UK is 2.7 bank accounts, but I suspect that some of us on this panel make up for quite a lot of the statistics at the expense of others whose footprint is much, much smaller. Now, Joe could query the data and tell us that, but the reality is the banks can't, because that's not how they're leveraging the connectivity. And the reason I wanted to jump in is because we're addressing the question on multiple layers, as we absolutely should. And the question that emerges from like the boring infrastructure person is, the bank should not be driving this conversation. I think we're all agreed there, but they're a big component in delivering the solutions that need to be highly nuanced in terms of both the morality, the intervention, the self-selection, and the net impact. The investment that will need to be made in the technology that permits that is something that the banks will have to carry, and the regulator will absolutely help drive that. And to Joe's point, it's available. It's not rocket science at this point. But the reality is that we are very often looking to banking institutions to provide answers, to provide solutions. I'm seeing some very interesting questions coming through around what are banks doing, and, you know, should we have the sort of if this then that type of opt-in so you can create your own rules. And the reality is, I'd rather not leave that to a product designer inside a bank. I'd rather take the insights I'm hearing in this conversation that layer the multiple interconnected issues that have to be solved and say, hello, bank, you're part of the solution, but you can't drive because you're a commercial organization and you'll be looking at where you can make money out of this. And you can't drive on the moral discussions because that's not your position. But you can participate in those discussions, and hopefully we'll get you to a place where servicing vulnerable customers and vulnerable communities is something you can do as part of your normal business without a massive discount on profitability. But the starting point is we have the data. We don't necessarily have the insight right now, and we're a long way from it.
Thank you, Leda. So I think there is so much in this conversation. We started with, you know, effectively a conversation about, you know, how can we help people in vulnerable circumstances? How can open banking help with that? And what we're really hearing is actually that there are some very big ethical issues here around the use of data and around our identity and around the way we think about ourselves and about how we as communities of people actually relate to one another and actually are empathetic, such that the design of services and the use of data and the design of services is appropriate and trust-inducing and inclusive, I think is probably the word. I just wonder, I know we're kind of running towards sort of the last few minutes, 10 minutes, so I'm not sure we're going to get to many more questions, but Chris, I just wanted to come back to you. Joe talked about, you know, reimagining the future, and Leda has highlighted some of the challenges that we have in terms of thinking that through. Who should be reimagining the future? Who's in charge, and who gets to choose what should happen for people, if you like, and in this melee of activity. Can you ground us a little bit? What does inclusive design look like? What can we give our audience that they can take away so that this becomes a real practical conversation?
Well, you can treat this as an intervention, maybe, if you like to be grounded. It's kind of so I posted the paper Micmacateers, Beware of Geeks Bearing Gifts, because it provides one of the most interesting narratives I've come across about just questioning some of our good intentions. And I completely agree with Joe that we live in a new world, but in a new world we need new laws and new regulation and new controls. And I think the whole issue of inference has got to be alongside that issue of data privacy, because some of the inferences that are drawn from some of the models that we can generate, and it is easy to generate some of these models, sometimes they're unverifiable. They sit within confidence limits. We say, well, the probability this is correct is such and such. And I think that's fine when we look at aggregate data sets. But if for the individual consumer, that raises really worrying questions for me, particularly if we move it into other contexts where an inference about who we are can be more than just damaging on paper and can have a kind of a wider ramifications. Leda's really right about this is something that we need to question about watching the gatekeepers. I mean, in terms of firms' internal data lakes, they are doing some really interesting work driven by edge cases, and Bailey was mentioned a while ago, and Bailey's working, I admire greatly at Tuco, and that's using kind of what we know about edge cases, people who have particular needs, to generate things and product features that are better for the wider population. And gambling blocks is one of those. Most people who turn on a gambling block on your bank app don't have a gambling problem, they're worried about fraud. You look at the Monzo data, that kind of plays that out. So, but to try and ground it just a bit more, I think what has to be really central in our minds is we started to be kind of vulnerable to what? Just keep asking yourself, vulnerable to what? What is this consumer? What is this consumer group vulnerable to? And it sounds like they're vulnerable to some of us. I include myself in that list, and kind of what we're trying to do. And the only way you can really ground yourself is to have the consumers as close as possible to the development process. We all work with samples of data aggregated, but those individuals are a very long way away, and they're just numbers on Stata or SPSS or MATLAB or whatever we're using. We've got to ground consumers in what we're doing, and they will tell us if this is a complete waste of time and money for you. Because I think if you're doing this commercially, you're going to want to make some money out of this, and that's not a problem. But actually, some of the things I see about open banking, the way it's dressed up about being a solution to non-financial vulnerability, are very worrying, because I just think that's not going to get you anywhere. I could go on much longer, but we're running out of time, Faith. So
really helpful. I think there's it seems to me that there's some really real opportunities in terms of thinking about open banking. One of the sort of challenges that Diane brought up earlier was the fact that payments haven't traditionally worked for consumers, and they're not using standard payments, and therefore that doesn't get reflected in their transaction data. But one of the things that we've been talking about is the opportunity for payment initiation services, which are open banking payments, to enable people to see their balance before they make payment, so they can see how much money they've got in their pocket, which gives them some of the control that they're looking for. And I guess I'm kind of keen to see those sorts of services being designed around actually what the payment needs that we have, not just what's the competitor to cards. All of us are quite well versed in using cards, but what are the needs of consumers? How can we design payments around the payer's needs and not just the payee's needs? And I think that goes a bit to your point, Chris, about what does inclusive design look like in payments, and how might open banking be able to sort of pioneer the way in that respect as well. So I'm just going to come out for a final statement from each of our panelists. And it's been such a wide-ranging discussion that I'm struggling to come out with my killer question at the end. But if I was going to ask one just based on thinking about this future world, I wanted to ask each of you, what new laws do we need in this new world that will help us deliver? So just a statement from each of you. What would make sure that actually the new world delivered and was more inclusive for consumers of all services? So I'm going to come out I was going to come to you, Diane, first, if that's okay. So if you had one thing that you wanted in this new world, what would it be?
Design something that's simple, helpful and clear, and keep everything you do simple, helpful and clear in a life that's complex for everyone, not just for vulnerable people in vulnerable circumstances.
That's great, thank you. And Leda?
For me, it would be laws around data portability. We're already seeing a direction of travel in that sense. And as we're worrying around which bits of data, who has control, who has visibility, and people don't value it as much as they should, as Joe rightly pointed out. Portability forces those who amass, package, analyze, and store that data to treat it in a particular way, because it might have to be packaged to leave the door. And I think that that helps us guard the guardians.
Thank you. So portability and rights around that. And Joe?
I think I'm going to come across like the villain here, but I'm just going to say I don't think we should have any new regulations on this. I think that it's a philosophical change we need to accept a new world where data is prolific and that these tools can't be unforgotten. And so we need to design a society that accepts that rather than try and constrain and regulate our way away from this.
Okay, and Chris?
I would say every time somebody says vulnerable consumer, everyone else gathered in a room has to shout to what?
That's great. Okay, so next time we hear it, we say to what? Okay, before we get to be twoo like owls. Anyway, so I just want to say a big thank you to everybody on our panel. As you can tell, we've got some really diverse views and some really different experience, and I just want to say a big thank you to each of you for standing up and saying your piece and contributing today, because it can be a bit hard, can't it, when you're sort of up against somebody who thinks differently to you. So thank you to Joe and to Diane and to Leda and to Chris. Really appreciate your contributions today. And just, I guess, to leave you with that, open banking can really help drive new improvements in the delivery of services. I believe that's why I've been kind of looking to try and encourage the good design of open banking, so it does deliver that benefits downstream. But there is the opportunity for risk. I mean, massive. But it's part of this bigger kind of shift towards a data-driven society, and it's just one bit of that. And as we kind of think about moving forward, we do have to think about what kind of cultures are we building, what kind of communities do we want to live in, and what kind of inclusiveness do we want to see. And I think certainly for me and our local community, you know, the impact of COVID has been substantial, and people have really been hit by the pandemic, financially and socially and mentally. And as a result of that, we've managed to kind of reach out and to form more of a community than we've ever had before. And I think it's important as we think about, you know, the cultures that we want moving forward, how do we as a community stay in control of data so that it delivers the thing that we want, which is actually an inclusive society where actually people can reach out to one another in times of need, and that we can actually work well as a society without creating the haves and the have-nots, or the vulnerable and the non-vulnerable. Although we don't want to kind of create that differentiation in that way. But, you know, I think there's something for us to think about in that role of data in creating inclusive places where actually people who are at risk of heightened vulnerability or in particularly difficult circumstances are catered for. And perhaps we can use data to help us, and perhaps we do need some help and laws around that to make it possible. So not quite in the place of saying no laws yet, Joe, but thank you very much. Thanks to everybody for joining us, and I hope you found it interesting and useful. There are a ton of practical resources in the chat, so do look on the Money Advice Trust website and the Vulnerability Matters podcast. And just to make you aware, there is another event which is coming up very soon with Digimass, and Money Advice and Liaison Group will be looking at some issues like this. So I believe that's being held on the 3rd of February. And it is being held at 9:30 to 12:30. It's called Let an App Fill the Gap. So take another look at this journey. So it will take you on a practical journey of how financial apps can support consumers who are financially challenged in better managing their finances. So please do, if you're interested, sign up for that event too, and continue the debate and dialogue there. Okay, thanks to everybody who joined us, and thanks especially to our panel again. Take care. Okay, bye.